Okay, everyone, and welcome back to episode 16 of Beyond the Headlines. I am actually super pumped that we've been able to go this long and excited for all the feedback that you guys are giving. You seem to like the series, so again, thank you for coming by and checking it out. And as always, keep it coming, keep the comments coming, the shares, the likes, all that kind of stuff. The algorithms really like it, so it really helps us out and encourages us to keep going. So, as always, what we do on this podcast is we take a look at the headlines of the week, but we are technical traders. We use statistics, we use charts, we use data as opposed to kind of what talking heads want us to think. And we go beyond those headlines and we see what's actually happening with those underlying stocks, whether or not they're reacting positively or negatively to that news at all. And we've got three that I'll summarize real quick and we'll dive into that we're going to talk about. First of all, we have Roaring Kitty back with probably the best pump and dump, the most pure play pump and dump of all time. So we'll talk about that right there. We have a big survey actually came out from McKinsey and Co., which is a huge management consulting firm, about negative reviews on electric power and EV vehicles. So we'll check that out, what that's doing to the EV space, if anything. And then more nano nuclear. I think we should have rebranded this show something about Steve and Mike talk about nuclear, but keeps coming up in the news. We keep seeing it. So let's take a look at the underlying stocks that's taking a look at there. So before we get going, Steve, how you doing? How was your week so
Mm.
far?
Good. It was a short one. I think I was gone Monday and Tuesday up in another part of the world, up in Southern Oregon. So
Oh, good.
looking forward to a Southern California weekend now.
I um we were saying this on our side channel there. I for one love the midweek vacation we had last week. I think we should do that. We should shut the market down on Wednesday every week.
Well, lucky you.
I think
We
that'd
get
be
one this week,
oh, I know that's great. I love it.
Thursday.
It's like you get two little mini weeks and then you're off in the middle. I
Hmm.
think that's fantastic. So first
Agreed.
of all, and this may be, I don't know how contentious this is going to be between us or not, or what's going on, but we have the old Catman back, who can no longer seem to push GameStop at all with his tweets, uh, posting a picture of a dog. Now, the connection that everyone made, for those who don't know, is that Ryan Cohen, the current CEO of GameStop, opened up another company a while back called Chewy. I looked into it a bit. I don't understand why it's a company, but it it's Amazon for dog food, but you can get dog food on Amazon and most pet food stores deliver. I have two giant dogs, so this is something that I would, be really excited about if it happened. So everyone's made the connection of Catman tweets a dog picture, CEO of
Well,
GameStop started a dog
I just have a
company.
question before you continue.
Yeah,
Is that a random dog or does that represent the logo of Chewy?
I don't think so because we have the logo
So my
built in
question
here, and
is why is everybody assuming it's Chewy?
well, it's the Ryan Cohen connection, right? So Ryan Cohen, the CEO of
Oh,
GameStop, opened and started this company, right?
that I didn't know.
Yeah,
Thank you.
he was CEO for this for a while. So that's the through thread, is they're saying, because there's been this whole behind the scenes craziness of that GameStop is going to purchase Chewy, which makes absolutely no sense because GameStop has like 2.5 or $3 billion in cash. Chewy is worth 12 billion, so the math just doesn't make any sense. But this, just going out to the long term chart, this has not been something that you've wanted to hold for a while. It started okay. And then I think what happened is that Amazon got into the dog food delivery, dog toy delivery game, and everyone's like, well, if I'm buying all of my other stuff, like I get my diapers from Amazon just because you can't ever be out. So I need to make sure they're scheduled to be there on time. With two kids in diapers, that would be an absolute catastrophe. And then ever since then, it's been falling. So this is on the long term chart, not something that's doing very well. Ryan Cohen, I think, left somewhere in this area and then went to chairman GameStop and then actually run GameStop. But then we look at the daily chart and it looks like a bad tick, like I actually go shorter. But this actually happened. And this it really hammers home what me and Steve have been talking about now for 16 episodes. And I think is going to be something that we're going to do agreement here as well, is that you see something, you see some hype, you see a stock move. This stock went from $27 up to about $40 and then closed flat on the day. And now it's down 11% the next day. So it seems like every time this guy tweets now, he's having lesser and lesser of an effect on GameStop. I think a lot of people got burnt there and they're just moving on with their lives. But also quick hits on this. So, you know, my advice is going to be the same as always. If you're like a super short-term scalper and you have the wherewithal to get in and to get out, yeah, go right ahead. If not, just stay away from these news driven, these meme stock type plays. GameStop or Chewy's not even that heavily shorted. 15% is a decent short float, but nothing really wild. But yeah, with that connection made, and that's why everyone went after
Mhm.
it. It's great, but it's a pump and up. And I just want to, before I'm going to turn it over to you, Steve, before I say it, I'm not saying that I don't think there's anything illegal going on here. I think there was a perfect example from the Odds Lots podcast, which is another great financial podcast. And they had a guy on who said it right that, this guy has a genie and he can, at least for a while, a couple times, he can rub this genie lamp and he can make GameStop do whatever he wants. But he's not doing it in any sort of recommended way. It's just his association with that. Kind of the same as when Elon just tweeted, 420 funding secured way back in the day on Tesla, and it rocketed and caused a short squeeze as well. They're not saying go buy Tesla. That would be one of those illegal pump and dumps. An illegal pump and dump would be me saying, hey, let's all pile into this penny stock and I'm going to sell it before the rest of you guys and dump it on your face. I don't think that's what's happening, but these are just definitely news driven by short term, hyper scalper retail traders are getting in and then trying to get a few bucks and get out as quick as they can. And the time frame is getting shorter and shorter and shorter. So unless you're in that time frame, again, I just think you kind of just stay away. So what are your thoughts on all this, Steve?
Well, definitely never be, I'll just say it, never be the fool who chases. If you want to come to my screen, we might as well draw some stuff up here.
Sure thing.
Never be the fool who
Oh,
chases the green candles because you see something um, interesting. So if you pull up Chewy and you start buying here above 35, you really do deserve to experience this. I've done it. Everybody's done it, and you
mm-hmm.
have to do it in order to experience the hot stove that you should not be touching and learn from it and don't do it again. However, there's a funny wrinkle to this. I had a little genie likes to send me ideas of what he's doing in real time sometimes, and I respect his calls. And this is TRUP, Trupanion. It's basically your little dog face right there. And look at that 38% short. So the little
Mm,
genie trader who sent this to me was curious about this setup. Everybody assumes Chewy because of the connections you just made, but we're here about charts telling the story. And
yep.
back way up, here's the weekly. We all know that GameStop has turned into an acquisition launching pad. And maybe in the theme of things, there's the weekly. We just switched to the daily there. I'm sorry. Let me switch to the daily. And it's holding above its 200, above its 50, but it's holding above all these averages on the launching pad, perhaps with a giant possible catalyst, the short squeeze, the short squeeze. Oops, 38%. There it is. And I'm in it. And I bought it yesterday. And I said, if this thing wants to fail and come down, all the other ones were failing, Pets, Chewy, and some of the others I can't
Yep.
recall. But here's my 5-day moving average. I talk about this all the time. There's this morning, we had a little stop hunt this morning. So to me, the chart's telling me the shorts are a little scared. We got 33, not a medium sized float, but over one
One.
third of them are short. And now you've got Meme Boy sending out, warning shots that might spook somebody. So I'm going to stay in this thing as long as it behaves. Let me just see where I am, just so I know here real quick. Um, Trip. I'm flat. I'm actually flat from yesterday. So I've got nothing to gain, nothing to lose by just sitting around and seeing what happens here.
Mhm.
So that's just a side wrinkle there. Who knows what's going to happen? It keeps the Reddit crowd and the traders excited when these memes pop out. But Michael's right. You cannot chase green stocks.
Yeah.
And you have to assume that the headlines that you're chasing are probably going to be negated pretty soon. However, I'll just again say that the chart, the little elf trader friend of mine that told me to watch, I'm in it and I'm still curious. So we're Friday morning. Let's see what happens by Monday.
And I think that's an interesting lead into a discussion on algos and how they work and all of this, where a lot of these companies, and especially things with like ETFs, there might be a dog or a pet food, pet insurance, pet whatever ETF out there. So, this is something that used to be a little bit of an exploitable edge. And I know, Steve, because I used to watch your videos. You guys used to do this all the time. It got hammered away when a lot of the algos came in. But back in the day, what you do is you'd say, okay, there's good news on Goldman Sachs, and say that hits right away. And you wouldn't go and trade Goldman Sachs, but you'd go bring up Wells Fargo, JP Morgan. You'd bring up the other related banks and see, okay, are they moving as what we call a sympathy play? And sometimes there'd be a lag between this thing moves and now the other things move. Now it happens that there's some algo out there that saw Chewy moving and said, okay, now let's buy a basket of other dog related stocks. And you see those things move in tandem. So that initial sympathy play has been edged away. But what's interesting, and I think what Steve's showing here is, I talk about relative strength all the time. We talk about relative strength all the time. Chewy completely fell apart and is down 10% today. This one is holding up. So regardless of whether or not there's, some sort of buyout or whatever, I really doubt that would happen. But the
Well,
what more likely is happening is there's a whole bunch of shorts in this that are saying, shit, if that thing happens on this that happened on Chewy, I have to get out. So they're now going to be, in what I'm thinking and what I'm seeing, they're going to be a floor. Every time this thing pushes lower, they're like, it's time to get out of this short. Let's start, buying as things are pushing lower. But yeah, that sympathy play and that through line of, if you see a stock move, and we're going to talk a little bit about this at the end of the episode with nuclear. Sometimes you can be right about a theme, and you do a good job of hunting around for it. And again, that's something great that we do at Trade Ideas.
well, I just wanted one more point that I got to finish. Everybody loves their dog and their cat and
Mhm.
their pet, and they'll probably feed their dog and their cat and their pet before they feed themselves. And this is a formerly $150 stock that's an insurance company for your pets. And if I'm an acquisition company, this is a pretty good looking weekly chart. So you said it. That's the story. The chart is setting up. I mean, this is the kind of stuff Warren Buffett salivates over, right?
Mhm.
Value, deals. And again, I'm going to say the market is there. People love their animals.
I
So
have
it's a new
I've
fun
got pet
story,
insurance on mine. Yeah. No, I've got
right?
it's I had one dog and didn't get pet insurance. And then with every dog in the future, you're like, yeah, I'm going to do this because it saves those bills so much. So yeah, it's interesting. And just again, the takeaway I want for the viewer is that if you see something like Chewy that's up that much and has gone crazy off one dude tweeting a picture, that's not the move, right? The move is to do like what Steve was talking about. Let me just look at what else is in the pet space that may be a better looking chart and a better looking candidate. And let me go there. I don't have to chase that one move. There are tons of stocks in the market. There'll be tons of setups. And if you did chase Chewy, I'm sorry, as I look, it's now down 12% on the day, right? It's not the way to go about doing it. So yes, the next story I have here, and this was so for those who don't know, McKinsey and Co. is just a giant management consulting firm. They do, a lot of they just collect data and do surveys and all this stuff, so that when a company comes to them and says, "Hey, we need you to help us with our business," they're like, "Okay, well, let's go." And we have all this data and everything going. And they did this survey on I don't think they said how many people. Oh yeah, 37,000 customers. So that's a pretty good survey of a poll, right? Sometimes you see these polls and it's, hey, we asked 100 people. It's like, well, where'd you get those 100 people from? But 37,000 people, and nearly half, 49%. So I would say, like rounding error, half of those people said that they were ready to go back to a non-EV. So next time they had a car, if nothing changed, then hey, they want to go back, and you can read about why with the story. But um, they saying the costs were too high, and the infrastructure was the biggest problem. There's gas stations everywhere. There's charging stations more rarely. I bet you have 100,000 times the charging stations down there in California that I see up here in Nova Scotia, Canada. But those were the big. They're saying, hey, it's just too hard to find a place to charge this thing. So you would expect, if nearly half of that survey are saying we're going to go to something else, if I brought up something like Tesla, it would be down on the day. But this chart, I'm not going to lie, Tesla looks like a pretty decent little move, potentially a little
We've been
breakout
talking
of
about it.
these couple weeks low. Yeah.
We've been talking about it, and again, maybe last week, if you didn't catch my drift, I have no problem shitting on the EV market. I think they're ridiculous for many reasons. Matter of fact, it's become so ubiquitous. If you own a white Tesla in San Diego, you gotta look at the wheels to see which car is yours. There are literally. I did a video once just for fun. I stood on the top of a parking garage over the freeway, and I said, "Let's count how many white Teslas we can find in 10 seconds." And like three drove by. It's
Jeez.
uh, it's just the goofiest thing. I've seen them have to line up in the summertime when there's power grid issues at the mall to get charged. There's a reason that Hertz was basically selling them for 25K a pop, no haggle, no price. Pick your car, it's yours for 25K. The same friend who gave me the TRUP recently told me he rented one. He thought it was cool, but he was so annoyed sitting inside in the rain while the car was waiting to charge, and he still had to put a credit card in the damn thing.
Mm.
So I don't think they're going to make it. I didn't even touch again on the cobalt mining issue of humanity, but I don't think they're going to make it. But for now, the chart is proving me wrong because Tesla is kind of breaking out of that little wedge that we've been talking about for weeks here. So here's an example where the headline is getting a bit of a conflicted story. And then again, we had, what was that? Rivian. Some pretty decent news in Rivian
Mm.
too. So those two names are kind of holding firm against that headline.
Yeah, and again, that's exactly why we're doing this podcast, is just to show you guys over and over and over again that it doesn't really matter what a lot of these headlines say. They can be reasons to bring up and look at charts, but yeah, with Rivian is going to partner with Volkswagen, I think it was, to
Mhm.
make some cars, and we have Tesla. We talked about this last week and saying, hey, this was a nice little gap up, and it's just been chopping sideways ever since that gap up. So if it could get some strength above the gap up, then that's where we're interested in getting involved. Looks like that's happening today. 1.5 normal volume. So for me, I'm going to look at this one next week for potential buy, even though this headline is down. And just to my opinion on EVs, I agree with Steve that we just need to. I obviously like the concept of having something that's not powered by gas, and the simplicity that comes with that, but we're just not there with battery tech. That's the problem. Is it?
Oh, the other thing is insurance companies are getting just roiled, so they're having a hard time insuring them because basically
Yeah,
any type of accident is future risk of battery fire, and their lawyers told them that's bad.
yeah.
So the insurance industry is trying to figure it out as well.
It's
You
just
basically can't, your car is totaled if you get, in an accident, regardless.
the next. And I know it's a bold claim, but there's nothing I can do about it with my money. But if I could, I would. I think the next $1 trillion company is a company that figures out better batteries, because that solves everything when it comes to energy. If you can,
Mhm.
I know there's companies out there that are working on batteries made of iron. I know there's companies that are working on batteries made of silicon, and you can take sand and turn it into batteries. Anyone who figures this out, they win. They're going to win the whole world, because you could just, take a spot in the desert and huck a bunch of batteries in there, and away you go. But yeah, right now with the technology we have and lithium, just not the move. Like Steve has mentioned, the way we get it is not good. countries that have the most of it are not countries that we want to really deal with mostly. The explosion risk, the fact that they degrade over time. Every time I've got an iPhone 12 and I have to almost get rid of this thing soon because the batteries, I have to charge it 3 times a day, and that's lithium. So what happens is every time you charge lithium, it can only hold its charge a little bit much. So yeah, if you're looking for the next massive giant company out there, it's going to be somebody who figures out some sort of better battery tech. That's going to be the biggest thing. Um, but speaking of energy, right, we've got another kind of green energy that, again, me and Steve have been harping on for a long time that is actually doing fantastic, where a lot of these other sources aren't so much. So, um, I guess, again, I actively avoid any sort of knowledge of U.S. politics. Even I don't even play with Canadian politics that much. But Congress, I think I remember Congress is your lawmaking body down there, passed some sort of bipartisan bill to talk about nuclear. And the only thing I know about US politics is that you guys are at each other's throats so much that to see the word bipartisan seems very rare. That both sides of the aisle kind of agree that, okay, we need to get more into the nuclear side of things. And this is something that me and Steve have been talking about for a long time. And this release actually comes from this nano nuclear. So we'll bring up this chart, this NNE. But it's interesting because this company is in the same space and is in the same world as something we've talked about in the podcast quite a few times, which is SMR. But I'm going to turn this over to Steve and let's go over to your screen there, because I know you've been actually, I'm still just long and holding my entire position of SMR, but I know Steve's been playing this NNE or this nano nuclear. So why don't you tell us a little bit about it?
Yeah. So I've been doing a lot of trade arounds lately. What does that mean? That means stocks that are just crazy, right? And we talked about not being this person, but
Mm-hmm.
waiting and stocking and waiting and stocking. And there, I set an alert yesterday and it touched my 10 SMA. So I nibbled some NNE and took it home. And then I think I bought a little bit more at the close. And so I had like a medium-sized position, but giant pullback. And again, I lean on and I trust that 10 SMA. So I'm actually trading around in this one before I go to that one. SMR we talked about as well, same technology. This also, I no longer own this one. All right. I've been trading around. I've been buying the dips and selling the rips. I want nothing to do with this stock right here. But as you can see, I have a blue line. That blue line is kind of guessing where the 10 SMA might be.
Yep.
And that itself might still not quite be the spot. I'm actually thinking it wants to come back down because look at the past. The past, the 20 SMA has become the backstop when it gets way ahead of itself. So I'm going to watch it here. I'm not going to say I might nibble a little bit just to keep it on the radar, but I'm actually kind of looking for maybe a break below 10 in the coming days, and I'll be a buyer right there. That's the anatomy of a trade around. So let's go to the I'm sorry, the NNE chart because I'm still in this one, but I want to talk about it. So here was yesterday. We kind of closed on lows. I bought a little bit there. I think I bought a little bit there. And so I took home what I had. Got a nice lift on the open. Okay, great.
Mm,
Pulled it up and it was slamming right into my what? My 5-day moving average. You have to punch yourself in the face and say, if you don't sell some here, you're going to regret it. So I took a third off at my 5 SMA. So I took some profits. Now I've got kind of a pinch situation. So I'm just walking you guys through the anatomy of like a day and a half swing trade. I'm looking for maybe a second attempt by the end of the day to get back through there. And if I can do that, I will probably sell some more. And then I would keep 1/3 and just see if this thing can get crazy again. A lot of times, charts that get crazy have a hard time getting crazy again. They usually kind of come back to their senses. But,
yeah.
with SMR, you could have said that back here. So it's an interesting technology. These are two charts that I've been doing a lot of trading around. Again, not buying the breakouts, I'm buying the pullbacks. I'm really looking for this area right in here, the sweet spot probably. So I'll adjust that actually, and that's all I've got to say. It's just it's been an interesting. This is a new issue, by the way, and I did a quick anchor off of the IPO, and we didn't even quite get to the anchor. I don't think we bounced right before it. There it is. So I used the old school 10 SMA and it worked for me. I've already taken a third profit. I'm looking for some follow through, but I'm switching to my intraday chart here and I'm now playing the pinch. What's going to happen? Is this going to hold it or is this going to keep it back? I will let this resolve either direction and that'll tell me what to do.
So I I love this, and I'm actually gonna do the same with SMR and talk about that. And I'm going to tease a little bit. Ooh, my there we go. Camera was going a bit nuts. I'm going to tease something to the people who are this long in the podcast of something we are launching
Mm,
really, really soon at Trade Ideas next week, maybe well after the July 4th week. We're gonna launch this. So what you're seeing is same chart, SMR chart, but this is applied an indicator that we've been working with Tyler Wood, and who's the director of the CMT, and his partner Alex, who have been working on this indicator for a long time, simply called Go No Go. And the idea, as someone who was able to build this into the system, is that it uses a whole bunch of trend indicators, like Steve talks about his 10 SMA as a trend indicator. It uses a series of these indicators, and it colors the chart based off of how strong the trend is. The more blue it is, the stronger the trend, and the less blue it is, the weaker the trend, but still an uptrend. And it does the same. You can see a little bit behind my head here, where light pink is a weak downtrend, and dark pink is a strong downtrend. So what I've been doing, and I've been playing with this um, long before I was able to show you guys, but I've been doing some trade arounds, but I'm a longer term trader than Steve. I'm one of those guys where my year is usually made up on just a couple of trades that I really am able to hold and go big. And I'm using this indicator for that as well. So we originally started to talk all the way back here, Steve, or on SMR around this base
mhm,
right here.
you did.
And we got this initial breakout. So I bought this initial breakout. And my plan, without really being able to tell you guys, because we were still working on this, is was twofold. Was one is we also talked about the anchored VWAP from this major high right here. You can see that acted. I said, listen, if we close below this, that's going to be my absolute stop, right? So I'm in from 650, so like right around here. So my absolute stop loss was right down here. Say, hey, if we close too far below that anchor VWAP, it's time to go. And now I'm just using the indicator to get me out. And my idea is that if I ever see an orange, which represents a neutral trend, or I see a pink, which represents a downtrend, then it's going to be time for me to go. And the beauty of that is that it's kept me in through all of these dips and all of these
Mhm,
pullbacks and all of this. Now, I still have a lot of risk on the table. So, if something bad happens to this and it gaps down, I could still lose money on this trade. With a stop loss sitting kind of right under this anchored view app right now. But it's a very interesting indicator to keep you with the direction of the trend. And what was very interesting is that NNE, is that the other guy? Yeah.
mhm,
Um, if you line this up, and there's no reason why you can't combine it, the idea behind this indicator is that it's using so many other indicators that you're not getting your chart cluttered up if you want to add
mhm,
one of your own that you like. So let's add Steve's 10 SMA. A simple rule set, and something that I think would be interesting to take a look at, Steve, once we launch this thing, is a simple rule step would be I'm going to look to buy touches of the 10 SMA, but
mhm.
only in
Colored.
go trends, only in blue trends. And same with the way back down. If I'm looking to short a stock, I'm going to buy touches of the 10 SMA, but only if the candles are colored pink. So yeah, really good way just to kind of define your risk and define your trend for those who really don't understand or are new when it looks to trend. So yeah, that's my game plan with SMR. Is I'm just simply going, I'm going to look at the candle close every single day, and at some point, these candle is going to turn orange like it did right here, or pink or whatever, and that's going to be my exit. But right now, I'm sitting at a very good, almost not quite, but almost 100% gain on this one. So of course, I wish I had more. That's always the way it works when it goes your way, and you wish you had less when it didn't. But yeah, this is working out really, really well in this favor. And I figure a sneak peek for the people who hung out this long in the podcast and got this close to the end. So that's the idea. Again, just more nuclear talk. I don't think we would be doing a service if we didn't bring up uranium. when we're talking about nuclear.
Mm.
You can just take a little bit of a look here at the overall chart. So this indicator is showing a little bit of no-go right here, but we're at support. I like to look at ETFs and commodities on a longer term chart. And you can see on a weekly chart, we're still reading a go for launch. I think you've got a pretty good line in the sand at this prior high right here, and this prior high right here, and then support right here. So anywhere on URA from 28 to 26.50, 28.50, 26.50, that $2 band. I think that's where you're going to watch uranium to try to take a look to see what's pushing. But other than that, I think these little nuclear plays are going to continue to be on the news and on fire.
Well, I'll just wrap it up by saying we're excited about this product because this is what the new trader wants. They need something simplified. They don't want to
Yeah.
see a tangled mess of indicators, what they mean and how to use them. They want colors, go, no go. That's why it's called the simplicity of it.
hmm And yeah, and I my argument would be too that even if you're somebody out there who's been trading for a while, but you have 10 we see it all the time and when we're supporting trade ideas, people with way too many scans and people with way too many indicators, and then they miss price. So I like this just because as we're going through, if we just take a look at something like the SPY, and we just start going through different as opposed to having a whole bunch of moving average and indicators and everything up on the screen, I can take a look at this and I can just quickly say, okay, we are in an uptrend. So most of the trend indicators that exist out there are pointing positive. And then I can focus on support and resistance. I can focus on candlestick formations. I can focus, it just allows me to ignore the overall, trying to figure out what 17 different indicators are reading and focus on what we know is the only thing that pays, which is price. So, all right, guys. So if you have hung out this long and you've been able to stick with us the entire time, we appreciate it very much, as always. I look forward to doing this. I know there's a bunch of people that look forward to watching it. If you could like and retweet and share and do all those things, it helps the algorithm. It helps us out. Keeps us motivated to keep doing it, and I appreciate it. So, yeah, anything to leave the kids with before we take off for the week?
No, just enjoy the next week's probably going to be a slow, low volume.
Yeah.
Semiconductors are continuing to do well. Just keep an eye on the NASDAQ and tech and see if that keeps to drive the market higher.
Yeah, so listen, happy 4th of July for all the Yankees south of the border. We have our holiday on Monday, but I'll be here. I'll be working. So I get
All
another
right.
one of those strange days that I like that everyone else is at work and the kids are still at daycare because it's still open, and then dad has the day off. I love the weird schedule I have. But yeah, thanks everyone for coming by, and we'll talk to you next week.